Good afternoon. This is Keith Brown in Moultrie, Georgia, with some cash commodity commentary for Friday. It's about 3:30 Eastern Time. Sort of a week of reckoning, I guess, as we are in the full harvest, and have been, of course, and that has been putting some pressure on the grains as well as cotton, I suppose. But let's take them in order, I guess. Cotton today suffered hugely. We were down about 3 cents for the week. That's one of the biggest weekly drops we've had, as the December market got hit pretty hard. There was a story out from CotLook, which is the crowd in Liverpool that does a lot of global cotton research and analysis, and they just, in layman's terms, they came out with a number today that just simply said that global supplies would increase due to China's slowing. Well, that's certainly no new revelation. We've been talking about that in our literature and on this broadcast for a long time. I guess to that end, though, cotton just sort of came to its fundamental senses, and we were down 2 cents today. And it looks like if we can't really dig in pretty quick, come Sunday night or Monday, cotton may be on its way out to check out the June low. So we might want to look at buying some puts or doing some cash fixation, I guess, and take our lumps and see how it does come out, a little deeper, because we're getting pretty soon close to starting to buy next July calls. Over in the grains, we had a devastating day in beans yesterday. They really took a big hit, got followed through today, although they did come back and close higher, as did corn. I think, of course, the grains are in harvest, and you're starting to see what we call some automatic selling. By that I mean when that farmer takes corn and beans to the elevator, they don't put it in the bin and ride it. The elevator turns right around and sells the future. So there's some automatic hedge selling, if you will. Also, we're coming in close to the end of the quarter, and I just think with the election coming up and a lot of jumpiness and nervousness, a lot of these hedge fund managers are starting to taking some profits or just getting flat. And of course, scarily today, the technical analysis we use, the 9 and 36-day moving average, just today they rolled over bearish for beans, and that's after beans. So beans had to break about $1.50 to make them turn down. So you have to figure that everybody uses shorter term stuff like a 310 moving average, and that type of hocus pocus stuff has already been a seller. So you've got a lot of these well-entrenched long speculators that are coming out of the market too. So we could certainly break the market some more. In the grand scheme, I just don't think that the bull markets are over, but we need some new reasons to go higher, and we don't see that coming out unless we get some good numbers on the October quarterly grain stocks number or the supply-demand number out in early October. So fuel today was back up, but it's been hit pretty hard. The dollar was down, so nothing there. We'll have to monitor the situation over in the Middle East and see if it has any effect on us whatsoever. At any rate, if you have any questions or comments, or just give us a call at 1-800-910-1910. Thanks for listening.